Do you ever feel like sheer determination is keeping you going, but no matter how hard you push, the market seems to push back even harder? Or maybe you have had moments where bouncing back from a tough loss felt like a small victory, but you're not sure how long you can keep it up. If you have ever questioned what will truly help you succeed in the long run, stay tuned. In today's episode, we are breaking down the difference between grit and resilience and revealing why one might be the ultimate edge you need to thrive in unpredictable markets. You are listening to the Confidence in Trading podcast. I am your host, Agnieszka Wood, a trading mindset coach and a seasoned day trader with over a decade of experience. If you are new to my show, don't forget to subscribe so you can come back for the next episode. In this podcast, we explore the fascinating world of psychology and the human element of trading. We take a deep dive into different perspectives to inspire you and help you navigate the emotional ups and downs of trading with self-compassion and confidence. Whether you're just starting out or you're a seasoned pro, this podcast is your trusted companion providing support on your trading journey. Get ready to boost your confidence and unlock the secrets to mastering your mindset for success. All right, today I want to dive into two qualities that people often mix up in trading: grit and resilience. They are both important, but they are not the same thing. And understanding the difference can really change how you approach your trading journey. So let's start with grit. Grit is the drive you've got to keep going, even when the going gets tough. You know the feeling. It's what makes you stay up all night, analyze charts, and push through those frustrating days where nothing seems to go your way. It's about a sheer persistence, determination, and not giving up no matter how hard it gets. Resilience, on the other hand, is different. It's not just about pushing through or grinding harder. Resilience is about adapting. It's about bouncing back when things don't go according to plan. And let's face it, in trading, that happens a lot. Resilience means staying flexible even when the market throws something completely unexpected at you. Instead of just pushing harder, you're pivoting, adjusting, and finding new ways to navigate the chaos. And let's be honest here, grit alone won't always cut it in the markets. The market doesn't care how hard you try or how many hours you've put in. It's going to do what it's going to do. And your ability to handle that, to stay calm and adapt to whatever comes your way, that's where resilience comes in. It's about having the mental flexibility to say, okay, this isn't working. What do I need to change to make it work? Because in trading, you need more than just grit to survive. You need resilience to thrive. Now, let's talk about the market for a second. The reality is the markets are unpredictable, sometimes downright chaotic. You can do all the analysis, spend hours preparing, perfecting your plan down to the very last detail. But at the end of the day, you can't control what's going to happen next. The market has a mind of its own. Think about it. There are so many moving parts. One minute, everything is looking great. The technicals are lining up, your entry point is solid, and you're feeling good. Then, out of nowhere, some unexpected piece of news drops: a political decision, a global event, or maybe a big company CEO makes an offhand comment. And suddenly, the market flips. Everything changes in an instant. One second you're cruising, the next second you're scrambling to figure out what just happened. This is the nature of trading. We are dealing with this incredibly dynamic system where even the smallest ripple can create huge waves. Investor sentiment can swing dramatically based on tweet, economic data release, or even rumors. And the thing is, no matter how much prep you do, how many charts you study, you can't control any of that. The market doesn't play by your rules. It moves to its own rhythm. It's in these moments when everything seems to be flipping on its head that your ability to adapt, to stay calm, and to make quick decisions really get tested. Think about it. You've done your homework, your technicals are showing a solid uptrend, and you're feeling good about your entry point. But just as you jump in, out of nowhere, some geopolitical event hits and bam, the market tanks. All that careful planning feels like it went right out the window. Or maybe you've been watching a company for weeks, anticipating a great earnings report, but instead, the stock drops because of one random comment from the CEO during a call. It happens, right? These moments, they can feel like absolute chaos. And that's where grit alone won't cut it. You can't just grit your teeth and hope the market turns around. You need resilience here, being able to quickly reassess the situation, shift gears, and not let emotions like frustration or panic take the wheel. It's about staying calm when everything is going sideways and knowing when to pivot rather than stubbornly sticking to a plan that's no longer working. And sure, grit helps you keep pushing, but resilience, that's what helps you stay nimble, bounce back, and make better decisions when the market feels like it's falling apart. Think of it like this: grit helps you stand your ground, but resilience is what keeps you in the game when the ground shifts underneath you. Here's the thing though, a lot of traders get stuck thinking that grit, just working harder, pushing through every obstacle, is the answer. We've all been told that from a young age, right? Work hard, don't quit, and you will succeed. But in trading, that mindset can make you stubborn. And we all know stubbornness can be dangerous. You might hold on to a losing trade way longer than you should, thinking, if I just stick with it, the market has got to turn in my favor. Or maybe you double down on a bad position, convinced that if you just push harder, you will make it right. The problem is, no amount of grit is going to control the market. And when you are too stubborn to reassess or cut your losses, that's when things go sideways. You end up writing those losses all the way down, draining your energy, burning through your capital, and sabotaging yourself. Without resilience, grit alone can backfire big time. It can lead to frustration, disappointment, and ultimately failure. You need both: the drive to keep going and the flexibility to know when to adapt. So let's dive a little deeper into resilience in trading. It's not just about bouncing back from losses. It's about keeping your cool and adjusting on the fly when the market does something unexpected. It's about stepping back for a second and saying, okay, what's the market telling me right now? And how do I adapt? And not about being stubborn, hoping for a reversal. You're just staying flexible, reassessing, and maybe cutting the trade early if it's not working. Let me give you an example. Imagine you're in a trade that looks like a solid uptrend based on your analysis, but it starts slipping. A resilient trader doesn't just sit there waiting for a miracle. They might adjust their stop loss, scale down the position, or even exit altogether and look for a better setup. It's all about staying cool, adjusting in real time, and not letting the market shake you. And here's the thing: resilience is what stops you from letting one bad trade mess up your whole day. We have all taken those trades that seemed like a sure thing. And when they don't go as planned, the temptation is to jump right back in to make it back. But we know how that ends, right? A resilient trader takes the hit, learns from it, and keeps moving forward. Instead of chasing losses or getting emotional, they step back, take a breath, and refocus. It's the same thing when the market changes direction fast, like when you are in a trade and some unexpected news hits. A resilient trader isn't panicking, they're adjusting. Maybe they close out the position, tighten up the risk, or even shift their strategy entirely. It's all about staying sharp and making decisions with a clear head, no matter how chaotic things get. When the market becomes chaotic, traders who are only relying on grit may double down, pushing harder. But if you are resilient, you take a step back, reassess, and pivot. You adapt rather than forcing things to go your way. This adaptability is what separates successful traders from those who burn out. Because in trading, the ability to change course when necessary without losing confidence or getting emotional is crucial. In moments of market chaos, resilience becomes your greatest asset. It helps you stay flexible while others may crumble under pressure. As we said earlier, grit is all about persistence and determination to keep going despite challenges. So, how do you build it? One way to build grit is by setting long term goals, because grit comes from having a clear vision of where you want to go, whether it's financial independence, consistent profitability, or mastering a specific strategy. When you have that, when you have that long term vision in place, it gives you something to push through the hard times for. Every time you face a setback, remind yourself why you started and where you are heading. That's grit in action. Grit is also about mental toughness that comes from showing up consistently, even when things aren't going your way. And the best way to develop this is by sticking to your trading plan, even when it's tempting to stray. For example, maybe you have had a few losing trades in a row and you feel like scrapping your strategy. But if you can stay disciplined at that moment and stick with your process, you will build the mental endurance needed to stay in the game long term. Grit often looks like showing up every day. It's consistency over motivation. And it's about creating habits and routines that you follow regardless of whether you are in the mood. And over time, that consistency builds the grit because you learn that progress comes from showing up day in and day out, regardless of how you feel. Now that we have covered how to build grit, let's talk about resilience. Here is how you can start building it. First, embrace the unpredictability of the market. Look, the market's going to do its own thing, whether we like it or not. You can have the perfect setup, the ideal entry, but the truth is, the market has no obligation to follow your plan. And instead of treating those unexpected moves like the enemy, what if you started seeing them as opportunities to level up? These are the moments that can help you build your resilience. Let me give you an example. Imagine you are in a trade and everything looks solid. You've done your analysis, your technical indicators are all showing the thing you want to see, and you have entered your trade with confidence. And then out of nowhere, the market takes a sharp dive, and your first instinct might be to freak out. You might be thinking, why does this always happen to me? Trust me, we've all been there. It feels personal, right? Like the market is out to get you. But here is where the shift in perspective comes. Instead of seeing this as a disaster, what if you looked at it as a test? I know a trader who went through something similar during the 2020 market volatility. The day started out strong and he entered a position in a stock that had been rallying. All signs pointed to a continued uptrend. But then within hours, unexpected news about the pandemic lockdowns sent the market into a free fall. The price of his stock dropped by nearly 10% in what felt like a matter of minutes. Now, in moments like this, panic can easily take over. You want to sell, you want to salvage something, anything. But instead of letting fear dictate his actions, he paused. He took a moment to breathe, and instead of reacting emotionally, he calmly reassessed his position. He adjusted his stop loss to minimize further damage, but he did not make a knee jerk exit. He waited, watched how the market moved, and when it became clear that the downtrend was gaining momentum, then he made a calculated exit. No, he did not make a profit, but he walked away with his capital largely intact. The real win here wasn't about avoiding a loss. It was about the lesson learned. He didn't panic. He used the chaos to practice staying calm and adapting on the fly. That's resilience. Instead of seeing that dive as a failure or a reason to quit, he saw it as an opportunity to sharpen his skills for the next time the market threw him a curveball. Next, to build resilience, work on your emotional regulation. This one is a total game changer. We all know the markets are unpredictable. And while you cannot control what the market does, you can control how you react to it. That's where emotional regulation comes in. It's your secret weapon for staying resilient when things go sideways. Let's be real for a second. We've all been there. You have just taken a loss and your frustration is through the roof. Maybe the market moved against you in a way you didn't expect, or you made a mistake that you know could have been avoided. In that moment, all you want to do is get back at the market. You are simply tempted to jump into another trade, maybe something even riskier than your original plan, just to try and recover what you lost. That's the emotional side of you talking. And it's dangerous because emotional decisions almost never end well in trading. But if you have worked on regulating those emotions, take a step back, you know that the best thing to do in that moment is to hit pause. Maybe you go for a walk or grab a cup of coffee or even just sit on your hands for a bit. The key is to give yourself some space between the loss and your next move. Also, focus on learning from every setback. Here's the truth: every trade, whether it's a win or loss, has something to teach you. And if you are paying attention, this is where your resilience gets built. After a tough trade, instead of beating yourself up, ask yourself, what did I do well? Where did things go off track? What can I tweak for next time? I highly recommend to all my clients, keep a journal and not just track the technicals, but write down your emotions during each trade. Write down your thoughts. What is your internal dialogue while you are watching the charts, especially when you are in a trade, because then you are emotionally invested. And over time, you will start noticing patterns. And maybe after big wins, you will notice that you are getting overconfident and start making sloppy decisions. And that's how you build resilience, by learning from every hit and making sure it strengthens you instead of knocking you down. Another key element of resilience is practicing self compassion. After losing trade, it's so easy to slip into that spiral of negative self talk. You start saying things to yourself like, I'm terrible at this, or I'll never figure it out. It's almost like you become your own worst enemy, right? But here's the thing: beating yourself up doesn't make you a better trader. In fact, it does the opposite. It clouds your judgment, it drains your energy, and chips away at your confidence. So instead, what if you practice a little self compassion? I know it sounds soft, but it's actually one of the most powerful tools you can use to build resilience. Just think about how you would respond if a friend came to you after a rough day of trading. You wouldn't tell them that they are a failure or that they should quit, right? No, you would probably remind them that losses are part of the game, that everyone makes mistakes, and that they are learning as they go. So why not give yourself the same understanding? After a tough trade, take a step back and acknowledge that losses are part of this journey. Trading isn't easy, and you are bound to hit bumps along the way. The key is to treat yourself with the same kindness and patience you would offer someone else in your shoes. I know from my own experience, as an ambitious person and high achiever, I used to be incredibly hard on myself after every loss. I would spend hours replaying the trade in my head, picking apart everything I thought I did wrong. And it got to the point where I would start dreading my next trades because I was so afraid of making another mistake. But if you can shift that mindset and start introducing a self compassion practice, instead of spiraling into self criticism, just take a moment after each trade to reflect and acknowledge what you did right, even if the outcome isn't what you hoped for. Just ask yourself, what can I learn from this? Rather than, why did I mess up again? One technique that works really well is writing a short, self compassionate letter after particularly tough days. If you write it as if you are talking to a friend, saying things like, hey, I know today didn't go as planned, but it's okay. We're still learning. Tomorrow is another day. I know it sounds simple, but it really helps to reframe those tough moments and start treating yourself with the same understanding you would give anyone else. Remember, self compassion doesn't mean letting yourself off the hook. It's not about ignoring mistakes or brushing off poor decisions. It's about recognizing that trading is hard and you are not always going to get it right. In fact, most of the time, you're not. The key is to learn from those mistakes without tearing yourself down in the process. Because the truth is, You cannot grow as a trader if you are constantly beating yourself up. And finally, don't forget about celebrating your progress, no matter how small. It's so easy to get caught up in what went wrong. As traders, we tend to fixate on the losses, the mistakes, the things we could have done differently. But here's the thing, focusing solely on the negative can chip away at your confidence and make you forget how far you have actually come. That's why it's just as important, if not more important, to celebrate the wins, no matter how small they might seem. Think about it. Did you follow your trading plan today? That's a win. Did you stay disciplined and didn't fall for your FOMO and did not chase a trade? That's a huge win. And maybe you kept a positive mindset even after a losing trade. That's worth celebrating too. These little victories may not feel as obvious as landing a big profit, but they are the building blocks of long-term success. And even if at first you think it's pointless, why should I celebrate something small when I still lost money? But remember that over time, those small wins will help you build resilience. Celebrating progress doesn't mean you have to throw a party every time you follow your plan, but it does mean taking a moment to acknowledge your effort you were putting in. And maybe you wrap up your trading day by writing down 3 things you did well. Or maybe it's as simple as giving yourself a mental pat on the back for keeping your cool during a volatile session. It's these little moments that add up and build the resilience you need to stay in the game for the long haul. The key is to realize that every bit of progress, no matter how small, is a step in the right direction. And over time, these small celebrations help you build the mental and emotional strength that will carry you through the ups and downs of trading. So next time when you catch yourself focusing only on what went wrong, just take a step back and ask yourself, okay, what did I do right today? And you might be surprised by how much you have to celebrate. So here is the bottom line. Grit might keep you in the game, but resilience, that's what will help you truly thrive in the long run. Grit is essential, yes. It gives you that determination to push through tough times, to keep going when others might quit. But when it comes to trading, where unpredictability and market chaos are part of the game, resilience is the quality that separates traders who survive from those who succeed. Think about it. Grit will help you endure, but resilience is what allows you to stay flexible and to recover when things don't go your way. It's not about working harder or doubling down when the market throws you a curveball. It's about staying cool under pressure, adjusting your strategy, and learning from every challenge that comes your way. In those moments where the market flips the script on you, and it will, what will make the difference isn't how hard you push, but how quickly you can pivot and respond. While grit is about persistence, resilience is about adaptability. And in trading, being able to bounce back and adjust is far more valuable than just grinding through a tough situation. The traders who make it long term are the ones who know how to take a hit, learn from it, and get back into the market with a clear head and a fresh perspective. So next time the market doesn't go according to plan, remind yourself, it's not just about sticking it out or pushing harder. It's about staying calm, staying flexible, and seeing every setback as a chance to grow. Because at the end of the day, resilience is what will keep you not just in the game, but on the path to long-term success. And even if you consider yourself tough and think you can handle whatever the market throws your way, developing resilience is still crucial. Grit might help you endure, but resilience is what will keep you bouncing back stronger after every setback. As the saying goes, it's not about how hard you hit, it's about how hard you can get hit and keep moving forward. The market will test you, but if you focus on developing both grit and resilience, you will have what it takes to not just survive, but thrive in this journey. Thank you so much for listening to the Confidence in Trading podcast. If you are enjoying my show, please leave a review on Apple Podcasts and tell me what you like about it. Thanks to you, more traders will be able to find me, and together we will make a bigger impact. So thank you for your support. And if you are new to my show, don't forget to subscribe so you can come back for the next episode. And make sure to check out some of the previous shows too. Thank you again for tuning in. This is Agnieszka Wood from My Head Coach. Bye for now.